One. And welcome everybody to another Smart Money Circle update. I'm Adam Sarhan. With me today is Ken Van Leeuwen, CEO and founder of Van Leeuwen Company with approximately 300 million in assets under management. Ken, welcome to the show.
Good morning, Adam. Thanks for having me with you.
My pleasure. Thank you for coming on. So Ken, I always like to begin. Can you tell us a little about your story and how you got to where you are today, please?
Sure. It's, well, people who can see me, but the listeners can't, obviously. But the perspective, I've been doing this for a while, Adam. And one of the things was that way back in the 80s, actually, I and a colleague, we were institutional sales guys at one of the major firms that's still in existence today, oddly enough. And we were working with very affluent individuals. And we realized that affluent individuals, while they could buy $1 million, $2 million of municipal bonds a year, had no idea about a mortgage, or if they could afford a co-op apartment in New York, or if they could afford to send their kid to private school or whatnot. And that totally blew me away. Like the unsophistication of, from a financial perspective, personal financial aspect of many of these wealthy individuals. So we basically, he and I said, hey, maybe we could try to do this on our own and do a financial planning firm. And, financial planning really began, let's say, in the early 80s, and this was kind of the late 80s. So we said, hey, let's give it a shot. And we went on our own and started this financial planning firm.
Wow, I love it. So if you can talk to me a little about your investment strategy. I'm assuming it starts with the plan, but I don't want to make assumptions because I've learned the hard way not to. So by all means.
Well, Adam, that's a really great question because, yeah, it all begins with the plan. And we calculate rates of return that people are going to need to attain various goals, right? Like whether it's sending your kids to college or retiring or buying a beach house or anything financial. Like accumulating a certain amount of money by a certain amount of day. And then we outline and say, well, you need to get 8% rate of return on your money. Okay, well, what does 8% look like, right? Well, it means a certain allocation. And then we invest accordingly, right? Because one of the things is that we want to be very goal focused because it's funny, Adam, just this morning, I was talking to one of my clients that I've worked with for 34 years. And here they are, they're late 80s and they're still investing in stocks because they've learned that lesson, right? That they've got to learn their money has to grow to protect their buying power. It's not that they're going into their shell and they want to buy bonds after last year or anything of that nature. So these folks listened to me. So it was actually pretty good, but it starts with the plan. And then we make investments accordingly.
Nice.
Whether it's in individual stocks, individual bonds, bond funds, stock funds, ETFs, alternatives. But it really stays goal focused on them. Totally.
I love that. So Ken, let's talk about the plan and break that down if you don't mind, or unpack that a little bit. What elements go into a good financial plan and what mistakes do you see people make with the planning?
Well, okay. We like in financial planning, like you're building a house, and we actually talk to clients like this and it resonates with them, or at least with ours, right? It's like you were hiring us to be the architect of your financial life, right? It's like if anyone's ever built a home or built an addition or built a new bathroom or done anything, kitchen redesign, they know that they have an architect or some kind of designer, and they go through a lot of questions in terms of what you want. So when I'm the architect of someone's life, I start with the foundation, right? So that's why we work in a bunch of different areas of people's lives. Tax planning. We don't do taxes, but what we do is we want to eliminate as taxes legally as possible. We want to do the stuff that people don't like, Adam, which is, do you have a will? You'll be surprised about how many folks don't even have wills or powers of attorney or healthcare proxies or directives, right? Not the fun stuff that you like to talk about. Or insurances, right? Because we're fee-based financial planners. We don't get any commission. We don't sell product per se, right? So, but we want to avoid, but life insurance is a very key need for many, many people, right? Or disability insurance or long-term care insurance, right? And that's all the fun stuff. So that's like building that foundation before we even start saying, oh yeah, well, you want to buy that beach house at the Jersey Shore, or you want to relocate to Florida, or you want to do this, or you want to send your kid to Harvard. I mean, you got to make sure all these other things are covered. Right. So that's what we wanted to do as well, right? We wanted to make sure, and that's why we came at it from the financial planning aspect, because that's what financial planning meant to us, right? Is to say, hey, we got to cover lots of things before we can get to all this fun stuff, because people only want to know about the fun stuff. Hey, should I invest? Should I buy Airbnb? Should I do this? I mean, those are all the things that people, because that's the fun conversation, right. But a really good financial planner or advisor looks at a 360-degree level for people.
I know, I love that. So you're covering almost the blind spots and or helping people look at things that they otherwise wouldn't look at. This way, when it comes time to look at the fun stuff, the stocks, the exciting things, or the bonds or ETFs, wherever they're going to invest the money, all the other bases are covered, where the T's are crossed, the I's are dotted, so to speak. Is that correct?
Yeah, and also what you're doing is, right, you're talking to clients because they can understand that, right? Of course, many of them exposed to a loved one passing away, right? So they understand that, unfortunately, right? They understand that they don't like paying taxes, right? So how can you help me reduce my tax burden, right? They understand all that, right? Because I don't know of anyone, Adam, who necessarily likes writing a check to the IRS or their state they live in April, right? Right. So I think the perspective of it is those are all kinds of tangibles that what you can do for folks. And that's what they really do. They do get into. But of course, then they want to talk about the investments.
Well, let's go there then. What's next question? Please tell us a little about your investment strategy. Once you've got that plan in place, how do you invest the money? And speak to that a little bit, please.
Well, one of the things we do is, of course, when we look to invest is we develop an asset allocation. We develop what's the percentage of stocks versus bonds, and in stocks, for example, it could be international stocks, it could be US stocks, it could be emerging market stocks, it could be many things, right? So what is that percentage? What's the percentage of bonds? How are we going to get to that? Are you in a category where maybe you can have alternative investments, such as private investments, whether it's private equity or hedge funds or, some of the more exotic kind of things? And then we invest accordingly. And then I think the most important thing that we do, Adam, is we report regularly to our clients. And what I mean by that is we like to say that we're a client's CFO, right? And a lot of clients, because most of our clients are corporate executives, they can relate to a CFO. So they know that the CFO is the money guy, and the money guy is worrying about, are the dollars appropriately invested? Are you getting a return on your money? Right. Are you saving when you can? And that's kind of how we relate to them, right? But the reporting is the key thing, because then we can also say, you're on track, you're off track, we need to do this, we need to lighten here, we need to overweight here. And clients seem very in tune to that kind of methodology.
I love it. So what are let's talk about risk. How do you handle risk? How do you define it? And what are some mistakes people make with respect to risk management?
Well, first of all, Adam, there's a lot of risk management tools, programs nowadays out there, right? So, you can quantifying risk using very different metrics, and there's a few really good ones, right? So where you can show them what risk is from a numerical perspective. But one of the things is that you really have to talk to clients, and that's why, what is lost to you? Like, what is losing, for example? What's winning to you? Right? You have to really get into it. Tell me, because most of the people we work with have experience. They've invested before. What made you happy in your prior relationships? What made you unhappy? How did it make you feel when you bought XYZ and for $10 a share and it went to zero? Or how about the penny stock you bought that you bought $10,000 worth and you might as well throw the money out the window? I mean, these are all things that we talk to clients about, and then they can relate to that, right? And everybody has a story about loss, and then you can talk about, well, how do you win? Because there's always that adage on the street, right? And it says basically people hold on too long to their losers and they let go of their winners early, right, which is a really true axiom as well, right? And again, part of the big thing that we like to do in our world is we try to really understand the client psychologically and emotionally, right? Okay. And we try to identify them, or I won't say categorize because I'm not, educated enough from that perspective, but we want to learn how they work, how they think about money. It's super important to me because that's gonna give me, we'll have a better chance of success if I can understand that money personality that people. And I think that, because as we all know, people can sometimes try to defeat themselves. And that's one of the things that we want to try to get away from. And sometimes it involves, like last year was a great year, Adam. We're going through some real examples now, right? Where last year, because we came off 2021, which was a really good year for most of our clients, right? We had 22. People didn't seem as concerned as I thought they should be, with the results. Okay. Because they were coming off a good year. They kind of, this will pass. Because remember, we've also got conditioned, right, where in COVID in 2020, market went way down. And then basically, the Fed started pumping money into the economy. And then what happened is, there was a bunch of pain.
It doubled, yeah.
Right. And then we came out of it. Right. People were all kind of waiting for that again. Right. Okay. And of course, in 2022, that didn't happen. Right. So this year in our meetings that we're having so far, here it is, February 15th, clients are finally seeing, oh, yeah, on paper, I lost money, because we do a balance sheet for 90% of our clients, right? Okay. So, and we track quarter over quarter how their wealth is doing. And then when clients, for the first time in a long time, saw the lines going from the top left down to the right, it finally started to hit home. Okay. That, wow, I have less than I had a year ago. And I think that's now we've had to regroup with clients and say, hey, but this is what you're doing. This is what it's on paper. This is how we're going to make progressions. Look, we can show you 5 years ago, you're still above what you had 5 years ago. So, I mean, it's just interesting because you have to keep reminding folks and talking to them. I always think is one of the keys. And listening to them, which is the most important. See, I think that I learned this a long time ago, is that not enough advisors, financial advisors, really listen to their clients. I mean, really listen. And I think that's super important.
Ken, I'm going to go ahead and take that a step further and just not just financial advisors. Let's just broaden that out to people. People just don't listen to each other.
Well,
Yeah, I
that's
love
probably true, Adam. Ask my wife on select days.
it. Seriously, mine too. I love that. Okay, so let's talk about so risk and your investment process. So you just start with the plan just to regroup for listeners, and then you have the allocation process. You say, okay, here's a plan, here are the goals. Let's invest accordingly. You come up with an allocation model that works. You reassess every quarter, so you stay in touch with clients, and you take their emotional IQ or their psychological IQ or temperature, however you want to word it, which I absolutely love, by the way. And then from risk, you want to make sure that they're aligned with what's actually happening in the market. So they don't wake up one day and call you up and say, hey, Ken, what just happened? You keep them abreast of the situation as things go. And if you have to adjust, you adjust.
Sure.
And so far, a good recap of what.
Very good, Adam. See, because Adam, one of the things is, right, when you're working with clients, one of the big things that you have,
Yeah.
as I like to say, you have the brother-in-law syndrome, right?
Nice.
And what's important is you got to learn about the brother-in-law, because the brother-in-law is the guy at the July 4th party,
Right.
right? And he says to your client, so how you doing with your,
Yeah.
advisor that you talk about? Oh,
Right.
and your client says, well, we're up 7% this year, if he even knows. So he'll say, and the brother-in-law will say, well, I'm up 15%.
Exactly.
And so what happens is that then, of course, oh, really? Why? How? What are you doing that I'm not doing? And so then a seed gets planted in your client's head that now what we have to try to do, hey, my brother-in-law's up 15%, I'm only at 7, what am I doing? So that's why it always comes back, Adam, to the plan, their goals, their risk tolerance. And it's not just the client, it's couples, right? Because many husband and wives have very different objectives and risk tolerances, right? So you always have to be very mindful of, as I call it, the brother-in-law syndrome, the guy, the doer of good.
Yeah. Yep.
The
Yep.
doer
Yep.
of
Yep.
good
Yep.
who
Yep.
wants
Yep.
to take, but and we all know how the brother-in-law syndrome works out, right? So it's
Yeah.
kind of
They lose at the end.
well, or what happens is like, because I record all this stuff and I have good memory. So the next time he sees his brother-in-law, how's your brother-in-law? How's his portfolio? Oh, we didn't talk about it. Oh, okay. Interesting.
I wonder why.
Right.
Yep.
So
Nice. So next question, Ken. Let's talk about some timeless lessons, please. You'd like to share with the audience that you've learned along the way.
Timeless lessons. Well, I mean, I think, Adam, they're the easy ones, right? The easy ones are stay invested through all different market turbulences. Like you may adjust, you may raise a little cash, you may make some small moves, but never lose that overarching philosophy that you have about fixating on your goals and being an investor. All right. Like, for example, Adam, I'll tell you just a quick story. I have a client, she's going to be 104 in September.
Wow, God bless.
And one of the things is, and if you saw her portfolio, Adam, she's a very wealthy lady because she's invested. Of course, she had the benefit of compounding on her side, her and her late husband,
Right.
blue chip stocks that paid dividends.
Mm-hmm.
Okay. So, and she never wavered from that through all the years, she told me, because her husband was a very educated man. So, and that's what they did. Right. Yeah. So stay invested is a key thing. Also, don't always rush for the shiny penny.
Right.
What happens is that last year, of course, as we all know, was a tough year. right?
Right.
So what happens is that now people, they want to find something different, right? They want to make money, of course. So should we be buying real estate? Should I be investing in private loans? I mean, I've had that couple question, where I know a guy who'll lend money to people and, will get 12% a year or something like that.
Yeah.
So beware of all those shiny pennies, as I like to say. Not every investment does great always, especially whether it's you're investing in real estate, whether you're investing in equities, things like that nature. So that's the key thing, is to sometimes just sit back and keep doing what you're doing, right? And not rush for that shiny penny. And some people by nature always want that new thing, that new thing.
Right.
And that's where, a good advisor can help you, is because it's kind of like, okay, well, maybe we can take a couple $1,000s and rush for that shiny penny, but the predominance of your portfolio isn't going into that. And sometimes you have to, as I like to say, you have to be strong with people. You have to tell them things, because really what you are and we are is a fiduciary to them, right? You really are taking on responsibility to them. And I take that very seriously, whether you have 100,000 invested or $10 million with investment, we take that money very seriously. And you have to do that, right? To just keep them going down the path, right? And making sure that nothing happens to them that's unforeseen.
Yeah, no, I love that. How about timeless mistakes, Ken? What would be some timeless mistakes that you'd like to share with the audience?
It's interesting. The couple things, right, is the overconfidence bias.
Oh,
right?
yeah.
I think that is a super big thing that people have to be very careful about, where they think they're smart. And it's not that they're smart book-wise or education-wise, but they know more, right? That they've picked this great stock and it's gone up 10%.
Yeah.
And then they think that they never have to trim.
Yep.
Or they just become so enamored with how well they've done that they don't do anything else, or they don't listen to any other advice.
Right.
And that is, I think, a super big challenge, because then what happens is, and I've seen this many a time, where the investment starts to decline. And
wait a minute, they're not a genius?
What's that?
I said, wait a minute, they're not a genius anymore?
Well, they
know.
are still a genius. They're still a genius because it's still a great company, and they
Right.
can tell you everything why it is.
Great point. Yep.
It continues to decline. And then they start to rationalize to themselves and to you and to other people in their lives about why they're still right. Like they never step back and go, maybe the thesis has changed.
Yeah.
Maybe there's something that I should be weary of. Maybe there's something that I should examine, or the old adage, trees don't grow to the sky. Maybe what I should just do is, maybe I should take some profits along the way, right? I like to use these old adages, right? You never go broke taking a profit. Right. I mean, it's kind of true, but sometimes people, they just want to hang on, or which is really interesting to me, and I talked earlier in the podcast about how to, save taxes and stuff. But believe me, if there's gains to be had, the tax man's going to get a little bit of his share. So you know what? We'll share it with them.
Right. Seriously, it's a good problem to have. It's a champagne problem.
Yeah, it's a high class problem, as
It
we like
really
to
is.
say,
Yeah,
right?
100%.
So when the tax cart, as I say, drives the horse, that's when I get concerned. Well, I can't sell it because then I'm going to have a capital gain.
Yeah,
I mean, intellectually, that doesn't make sense to me.
not at all. Yeah, you're in the business of making money. So,
Yeah.
okay. I love that. So I I love what you're saying here, Ken. I have a whole chapter in my book just literally on cognitive biases. So, what's the best piece of advice you can share with the audience or with your 30-year-old self?
Well, if I had to go back to when I'm 30 years old, right, what I would say is never stop investing. Pick an investment path you want to go down and don't stop doing that because of the changing market conditions or presidential administrations or job or family. Always be an investor, whether it's real estate, whether it's stocks and bonds, and just continue. And the old word, because we're talking to my 30-year-old self, is it's no shame in having a budget, right? Really
Really true.
get a budget. When I hear people say, Adam, oh, I don't have a budget, I don't need a budget.
Mhm.
That's a concerning thing to me, but I think it's really important for any person, right? Whether you're 30 or 104 as my client, have a budget, know what you can spend.
Right,
But more importantly, when you know what you can spend, then you know what you can save.
right.
If you think globally, right, you'll still be able to do everything you want, but just know what you can do and what you can't do. And then, again, Adam, see, nowadays in this modern world, here we are in 2023, people, you sometimes disregard advice from years ago. Somebody once said, write for 30 days, told me, write everything that you spend every day for 30 days.
Oh,
And
wow.
analyze what you spent
Yeah,
to say, you know, I spent $250 this month on coffee, for example, or the big thing, when I was commuting was shoe shines at the train station,
right.
you know,
Yeah,
and would just go, oh my gosh, I
yeah,
spent that much, or the newspapers, or, because I was commuting back in the day when we read newspapers. So
right,
it's like on the newspaper.
right.
So, I mean, and then you looked back and you go, wow, I spent a ton of money. I didn't need to read 3 newspapers a day.
Yeah,
I basically just could get through one,
right.
right? Or magazines, Adam, right? I mean, it was kind of like,
100%.
you
It's
know,
all
you
blind spots. I love it.
is.
So, Ken, before we started recording, we were speaking a little about sales. It's one of your passions. It's one of your skills. Can you share a little or speak a little about that to the audience of what, besides listening, I know listening is extremely important. How would you go about if you were to share some skills with sales skills, excuse me, with the audience? What would you say there?
Um, well, listening is the key. But then also, after you've listened well, repeat back to the client what you heard them say,
Oh, I love that.
and then translate it back to them in actionable terms, how you can help them, and then ask Adam for their permission to help them. Can I help you with that?
I
You
love
know,
that.
we work with a lot of corporate executives, and frankly, corporate executives probably are one of the busiest classes of business individuals, right? Because they're always working on planes,
Yeah,
coming, going
yeah,
all the
yeah,
time, go, go,
yeah,
go, go, go.
yeah.
Never have time to do their own financial planning or reviewing of their finances.
Mhm.
So I said, is that something, you ask them, is that something that we could help you with?
I love that.
Um, And also what you need to do is you need to put it in, be really simple, Adam. And this is what I learned from a sales perspective. I have an advisory board of clients, right, in my practice. And one of the things that one of my clients, an esteemed attorney, once mentioned was that talk simply to people.
Yeah.
Because part of what we do, and this is in sales, right, is to get them to trust you. So how do you get someone to trust you? You get them to trust you by being simple. You know, it's not calling them buddy or pounding them on the back. Right. It's basically saying simple, a stock, like talk in words and in terms that they understand. Don't talk over their heads. Mm-hmm. Because immediately when you talk over their heads, you immediately will lose them. Because then what happens is, why is he doing this? Right. It's the same. See, it's the same with all of us. Have you ever gone to anything, you bought anything, and the guy, a car salesman is one of the, you know, like, I have no idea, Adam, me too. About car engine. So don't talk to me about the car engine. Talk to me about the stereo or how it drives or what my friends are going to say when I drive and they see my car. That's the stuff that I want to know about, right? Right. So, and also really be prepared, Adam, to help them buy. See, because if you're talking to someone, they don't come to you just because they want to idly waste their time. There is a legitimate interest there. Right. So, well, that's another thing, right? Don't waste people's time. Right. And also, I always believe is that, you know, keep asking them probing questions. Don't get discouraged if they don't make decisions right away. You know, you got to help them buy. Like, you got to ask them to say, you know, I can offer 3 different programs because we do financial planning for fees, right? You can have the high-end planning program or the mid-range planning program or the lower range planning program. What would you like to engage in? And then point them. It's like the old soda example, right? You go to the movie theater, or when we went to movie theaters back in the day, right? And then they had the super duper soda, and then they had the large soda, and then they had the small. So, you know, you stand at the counter and you go, oh man, I don't really want that big thing, but I don't really want that small one. So then where did they direct you? To the soda they wanted you to buy. 100% at the price that makes sense, because the other one's an extra. Yeah, I get that 100%. Right. So, you know, again, just get into people's heads a little bit. Read sales books, actually. You know, I mean, so many of us in our business or in business in general want to think sales is a dirty word. I don't think so. I mean, I think basically is without great sales people or sale, you know, where would we be in this country, right? I mean, if you think about it, you think about it, every politician wants to sell us something, right? Because they want to sell us that they can be the president of the United States or a senator or a congressman or mayor, right? So they're selling to us basically. Yeah, you know, to me, sales is the blood, lifeblood or oxygen of an economy. Without it, it doesn't function. So I'm the same way as you. I love it. And the key is then too, don't be embarrassed by it. Like some people don't want to be, oh, I don't want to be a salesman. Right. Why not? Well, right. But how are you going to commit your value to people? So right, exactly. Super important, right? Love it. Beautiful. Well, Ken, thank you so much. What is the best way for people to get in touch with you? They can reach me a couple different ways. It's I know it's a long one. They can send me an email at ken.vanleeuwen, and here we go, VANLEEUWEN at vanleeuwenco, vanleeuwenco.com. Or same old, the old-fashioned way, pick up the phone, 609-580-0088. We're based in Princeton, New Jersey. We have a nationwide practice. We used to travel to see individuals. Now everything, of course, is a Zoom call, but, you know, we'll meet you on your times and your terms if, you know, we can determine if we can help you. So,
Love it.
but yeah, well, thank you, Adam. It's been a
Thank you,
pleasure.
Ken. Hope we'll have on again soon.
You got it. Be well. Have a great day.